Okay, welcome back, everyone. Let's get right into the stock market technical analysis. Going to go through the charts, look at what we got going on. So Microsoft and Google reported after the bell. They have beat expectations. We're seeing some rallying in the after hours. So I want to talk about that. We'll look at the charts, see what we can get from the information that we have as of today. So triple Qs, guys, and this is the NASDAQ futures. You can see basically the range. Again, we've been very range bound for the last really 2 weeks or so. Bottom of the range right here, right in this area. And there's just so many reactions to validate that. We broke down today. Here's your breakdown, and then you can see in the after hours they're ramping it right back up. Now, as of right now, they've rallied it into resistance right here at resistance, and that's really it. I mean, that was former support, and now it's resistance. However, one thing I do want to point out, because we saw the breakdown that occurred really just before earnings, big earnings, we saw that breakdown. So it's hard to say if that's a valid move or if that's just kind of a false breakdown. We saw a false breakout previously on the upside right up in here. See that price action? This was the top of your range. We broke out to the upside only to be faded down. Perhaps, and it's not, we won't know yet, but this breakdown that we just saw today is also going to be a false breakdown, and we're just going to continue to grind around within this range. All right, that's possible. So we'll keep an eye on that, see what we have going on. We still have some more earnings, and obviously Apple next week. So Apple's going to be a clear market mover, and so we'll need to see what's going on. At the end of the day, I don't know exactly what happened, but we did break down. All right, we broke down to the downside, and we're now rallying in the after hours on the futures, back testing that from below. So if we can recover that and start to ramp up, that's going to mean that this was a false breakdown. And if that's the case, you're probably going to run up to the top of the range again up here. All right, 1329. We've hit that multiple times. Just because we break down and have a false breakdown does not mean that we're just going to go on to all-time new highs. Very similar to this price action. All right, we were rallying up. It was a false breakout. And we broke down, and yes, we did hit the bottom of the range as expected, all right? But that's it. Doesn't mean that we're going to continue lower. Of course, we did break down here, and if they recover it, I think it's likely to go to the top of the range. But it doesn't decisively change or give us any real direction on the next larger move. It just keeps us within this trading range that we've been in for the last 2 weeks. So that's it. That's all I see on the NASDAQ futures. Again, we'll look for kind of what happens within this price action right here. All right, do we get rejected here and continue lower, or do we recover and head to the top of the range? All right, at the end of the day, and again, we'll probably hear all kinds of bulls come out. If we rally tomorrow, you won't, and that's just the nature of the beast. Doesn't mean that we're going to just go on to just make the next leg higher. All right, all it means is we had a false breakdown and we rallied to the top of the range. Very similar to here, we had a false breakout and we rallied to the bottom of the range. All right, triple Qs. You'll see here on triple Qs in the after hours. Okay, that's better. Had to clean that up. We are rallying again. Looks like roughly to the bottom of this range, right in here. It's resistance basically. So if we can continue higher, it's right about there. Kind of adjust at 13. This is anywhere from 13.50 to 13 bucks, somewhere right in there. It's a zone of resistance. We're right in that zone right now in the after hours. So don't read too much into what happens into the after hours. It's really more important what happens when the market opens up. Large institutions, they're not going to be moving huge positions in the after hours. It's usually very thinly traded, kind of algos. Doing kind of initial reactions, and then oftentimes that move will get faded, so we'll look for that, but don't read too much into the after hours. We definitely want to see how the market trades tomorrow and we'll get a little bit more, a better feel for what's going on after these earnings. Here's Google. Just break down these individual charts. Rallying obviously up about 2%, looks like in the after hours. It's kind of moving around a bunch. And so again, we can't read too much into the earnings. If I go to the daily chart, you'll see here Just still kind of within this range we've been in for the last 2 weeks. Here's the point I want to make, though. If I roll out and look at earnings, here's an example of really what I want to say. All right, the last 2 earnings here. Here's the last time we had earnings. It was right here. We had an after hours pop, and that was basically the high water mark. That was followed by a down move of about 19% right after that earnings. All right, earnings was the high water mark. Here's the next earnings back right there. All right, they popped it right there after earnings, followed by a big gap down and a move of about 20% to the downside. If I roll out more, okay, there's earnings there, and that was kind of the low water mark. All right, earnings, now the market, Google sold off on that earnings, and it proved to be the low water mark, and then it rallied. All right, and then if I roll back a little bit more, all right, there. All right, this is the top of the bull market, or, this is kind of the highs in Google here, and you can see, actually, I think I missed one. There's one right here. There's an earnings. This one, kind of mixed. We're right in the middle of a range. No big deal. And then here's the last earnings right there. That was the all-time high as well. So you can see that Google has a tendency, if I go back, over the last multiple earnings reports, has a tendency to pop up after earnings only to be sold into, and it kind of marks the high water mark. All right, that's pretty consistent with how Google trades. Again, they know how to beat the earnings. It's all based on expectations, all right? If expectations is to hit a 7, they hit an 8. If expectations are hit a 5, they hit a 6. It's all about just how they rig up their numbers, how many shares they buy back in order to beat those expectations or at least meet them. They know what they're doing. Doesn't mean that the market's not going to read into that and sell off, all right? Okay, and then Microsoft, obviously selling down today. Right before earnings, they popped earnings. Earnings beat. It's up about 8.5%. Pretty good sized move in the after hours as of right now. One thing you'll want to look at, I do have this resistance line that's been marked out really since about 2016. You can see I've got multiple reactions here. Support, support, support. That support was broken back in, it was broken really back in about September of 2022. And, as of right now, looks like it's doing a back test. We could run up and hit a back test of that broken support line, which would now prove to be resistance. So, again, after earnings, we'll see what the market wants to do. Maybe they want to pop this up a little bit more. I think to hit that trend line would be about a 2% upside on that one. And then likely going to run into some selling. So that's a possibility. But again, we'll just see how tomorrow opens. I'm not going to read too much into the after hours price action because really anything can change. And also, they could come out tomorrow and just start selling massively, and this thing could just flush out. So it's really hard to say, based on the thin trading in the after hours, what's going to be the continued price action going into the future. Okay, SMAR hit support today, and this so far has been a profitable trade. So you can see here, just to kind of recap it, we had a bearish rising wedge. We had a breakdown and a back test. We had negative divergence showing up, and the position we took, I believe, was right here on this back test. And then again, it back tested for a few days, kind of going against our position, but still looked okay, and then ultimately started to roll over. So from the back test down to the first profit target, we are at about a 13% gain on that one. We did gap fill today, hitting this first profit target. You can see this gap on the daily chart, so probably expect a little bounce here. There's also this potential downtrend line, so I could see us bouncing to the trend line as a very possible bounce target. I don't know if we'll go much beyond that trend line. I think that's probably going to hold as and then we will continue to roll over. A lot's going to depend on the broad market and how the triple Qs is going to trade out tomorrow on what happens on this one. Okay, semiconductors, SOXX, good size downside size move in the semis today. You can see here on the semis on the daily chart, clear negative divergence that remains there. We have a support line to watch. All right, that's been this support line here, and clearly a broken down from that support line. So we're on a sell signal on the semis. These are continuing to roll over. Now again, big downside move today with the with the pop in the after hours. Okay, they might pop this thing up a little bit. We're not going to just crash straight down, all right? 3.5%, 3.3% downside move today. Pretty good size move. So I can see a little relief rally tomorrow. But again, just because you get a little bounce tomorrow doesn't mean that the downtrend has stopped, all right? This was a nice clean up trend. The divergence is telling me we're now starting a downtrend. So downtrends, the way they work, you break, you have impulsive moves down, you have counter trend bounces. Ultimately, you continue to work your way lower. So this still looks good technically. There's nothing changed. It's a profitable trade. We'll let it continue to work. Here's another one, PANW. Talked about this for, a couple weeks really, just kind of giving you guys the trade setup. And again, on this channel, if you guys are interested in learning about technical analysis, check out my course. I put it together a couple years ago, multiple videos, multiple concepts, all put together with a checklist, and it's priced affordable. So link is in the description below. I'm not promising you get rich quick day trading course or anything like that. Just teaching some fundamentals of technical analysis and a strategy that does seem to work. So check that out if you're interested. Link in the description. All right, PANW. Talked about this for a while. We had a clear uptrend, broke trend. It created the secondary trend. And what I talked about was watching for a break of the secondary trend would likely be the sell signal. Got that break right here. Now, for a few days after that, it did back test. That was an opportunity to add. And then sure enough, down we go. So let's say you took the trade even on the initial sell signal, you're profitable by about 5%, roughly 5%. All right, if you added to it on the back test, obviously you're more profitable. So this one's continuing to work. Now we have hit support. You can see on the daily chart, we've got some support right here. We just hit it today, so you're probably gonna get a reaction. We're seeing some in the after hours, so I don't think it'll go too far, but again, we're at support. So that's it. And then there's a gap to fill just underneath. So maybe a little bounce, probably continue to roll over and get sold into and fill that gap. All right. So that's my next target would be this gap fill. It's about 177.40. And then it'll probably head down to this 200-day moving average. Okay. So those are some targets. It's a profitable trade. It's continuing to work. Okay. GE. So this one had a, this is what you call an outside day. It's a topping pattern. It's a reversal candlestick right here. Boom. There's your outside day. What you want to look for is confirmation. More selling tomorrow. All right. That's what you're looking for. The more impulsive the selling, the better. All right. So that's what you're really looking for. You're really looking for people to be exiting the trade and selling. Okay. I think that's what we've got, and so we'll look for more downside. I don't see, there's a little support now, kind of a minor support right in here at about 93.70, roughly right in there. So maybe you hold there, but I think look for more selling maybe down to that level before you get maybe a little relief rally. Ultimately, I believe that relief rally will be sold into, and we'll continue to work our way down. My target on this one, I really like it down here, right there, about 69 or so, 69.50, somewhere right in there would be a nice profit target for a nice trend trade. That's be a drop of about 30%. Again, this one has had negative divergence building for a while. I believe this thing has topped out and we're just starting the move lower. Okay, so Amazon's next up. They report after the bell on Thursday. We also have Apple next week. So this is kind of these next 2 weeks, very there's just lots of volatility. You're going to have big moves after hours, big moves during the day, just lots of chop and big moves. So don't read too much into just the single reaction that you see after hours and means, everything's bullish, they beat earnings. Beating earnings is kind of a myth, all right? It's beating earnings versus expectations. What are the expectations? What someone expects, what the analysts expect. Analysts shift their expectations. They shift where they think profit targets are all the time based on the price action. Okay, you'll have a stock fall 30%, and then many analysts will come out and lower their price targets after the stock's fallen 30%. So to see things beat against expectations, it's kind of a moving target. It's really a myth. So in general, the price action, what the charts tell me, much more important than what the headlines are and how things are beating against expectations. So Amazon is reporting on Thursday, up in the after hours, kind of up into the 200-day moving average. And so we'll see what happens on that one. I can't read too much into right now, but we are just kind of back up at that 200-day right in there. So a couple things. Obviously, I have this downtrend line. It's not a very clean trend line because I'm overshooting it right here. So the pattern I'm really kind of clinging on to, I guess, with Amazon is this reversal candlestick. This is a topping stick right there, and it tells me that was likely the top. So even if they rally up, as long as we kind of hold that as your top, then I think Amazon's likely going to head lower from here. And then Apple. So Apple, just the biggest thing on this one is the support line right here on the daily. Support. Today started to break, not super impulsive, and obviously you got the FANG earnings. All right, started to break. In the after hours, they're kind of still trying to hold on to that. So I can't say that's broken. When you see that break, nice definitive break, especially if it happens after Apple earnings is out, or after all the earnings are kind of free and clear and we're done with the big mega cap tech stocks, and you see this break, then that's likely going to be the real deal. So I can't say whether they're going to just pop it up a little bit more tomorrow. The biggest picture is the downtrend line on Apple. Downtrend line that started the bear market is still intact, remains intact. We hit it here and it held as resistance. Hit it here again, it held as resistance. And so we'll just continue to watch that. Now if they can pop that, get a daily close, nice strong daily close above that, maybe string 1 or 2 days together, that's going to be bullish, and we'll have to take that at face value for what it is until we see a change. The negative divergence is still intact on Apple on the daily, so even a little brief pop can get faded, and then again we're still within this bearish rising wedge pattern. So as long as we remain within this wedge, maybe they pop it up, keep it within the very apex of the wedge into earnings, and then finally it just breaks down. All right, as long as you stay kind of right within this area, within this bearish technical pattern with the negative divergence, then everything's still a very technically set up bearish play. All right, and that's what we're looking for. And Apple's obviously a major player. If Apple sells down hard, it's going to bring the market down with it. So very critical, I think, at this point to continue to keep a close eye on Apple to see what it does, see whether it's going to break down out of this bearish rising wedge before earnings or maybe after. I do believe it's going to break down. I don't know if it's going to happen before or after, so we'll just give it some time. That's all I got, guys. Drop me a thumbs up. Join the private member group if you're interested in getting additional trade ideas, additional market insights. Link in the description below on that one, and I'll catch you guys tomorrow.